Mortgage interest rates hit new highs today as both U.S. inflation and even global, like the UK's inflation, cannot seem to be capped. So what is that going to do with mortgage interest rates as we move forward? Let's go ahead, let's dive into all that information right after this. Well, welcome back, everybody. Mike Petras here, your Star Realtor of Star and the Treasure Valley, back with another update to where we're going to go ahead and discuss mortgages and what is happening with mortgage interest rates right now in terms of overall U.S. inflation and even extracurricular or other countries' markets being able to go ahead and rock investor confidence out here. Before we begin, of course, I am a realtor out here in the Treasure Valley, Boise, Idaho area. I am also a certified master inspector. So if you do have any questions regarding any of this information, please feel free to reach out to me. More than happy to answer any questions that you have. And of course, if you are looking to buy, sell, or invest in real estate right here in the Treasure Valley, more than happy to assist you with that too as well. So I do look forward to hearing from you regarding that. Please comment below too if you have something to chime in. I guess the general question is, where do you think this is all going in the state of our current economy? Love to hear your thoughts about where you think mortgage interest rates will land towards the end of this year and maybe even into next. So let's go ahead and let's dive into the data and let's see what's going on. Okay, let's go ahead and let's dive into the data and see what is going on. Let's go ahead and let's focus first off on what is happening currently with the 30-year UMBS at the 5.0 coupon. And as we can take a look from the data here today, wow, big shot, okay, that it took. As we know, before we kind of go any further, is that when the value of the UMBS goes down, we can also expect the mortgage interest rates to go up, and that is exactly what they have done. They've actually hit an all-time high today at 7.22. And considering the data that we're seeing here currently happening in the UMBS 5.0, and this kind of dive at a 0.72 basis points, we can probably expect the interest rates to go even higher tomorrow. And really, what was kind of the culprit of this? The culprit of this was overnight selling or overnight trading because of the inflation data that came in from the UK. So in other words, from over there, the United Kingdom, their inflation is not doing well, and it is reflecting over to our markets, making basically investors nervous. And of course, they are dropping their stuff, which is lowering this value and raising the mortgage interest rates. So can we still see this continue to go? And honestly, the answer to that question would be like, yes, I do believe that it would. Because if we look at our own data, if we're looking back at the CPI report, which came out, the core CPI, we look at the PCE, we look at the ISM, and we look at the jobs report, it's all showing that inflation is still not being tackled. And this, apparent soft landing that they're coming in for to try and stave off a recession really is just not going to be coming along when it comes to the Fed. They are going to have to get more aggressive, and they are going to have to do it longer. So that is actually a good thing that I'll kind of touch upon as I go ahead and recap. But let's go ahead and let's just take a look at the numbers for today. As we can see, when we kind of started off or tailed end last week and started off this week, October 17th, we saw that the value went up, which lowered the interest rates a little bit on your mortgage. And then, of course, Tuesday, the next day, did the same thing. But today, boom. And really, why? All because really the UK's inflation data did not come out the direction that we want. And of course, this is a geopolitical world that we live in now. So it really kind of tied in and made investors generally kind of nervous, hence them jumping out. So is this 7.22 rate that we see going to be on the way up? Anticipate it to be so. And of course, if the Fed cannot get a grip on inflation and see month-to-month numbers come down in the core CPI reports or the core PCE reports, which are two of the biggest that they look at, PCE being the greater of the two, expect the inflation to continue to go and the Fed having to get more aggressive and interest rates to be on the way up. So if we're taking a look at the 15-year UMBS at a 5.0 coupon, we could also see that that went down 39 basis points today. And scrolling down all the way, if we're looking at what happened on Monday, it actually took a shot at 23 basis points, but then yesterday saw just a tad bit of relief. And then today, of course, the same thing. So where are we sitting at overall? Okay, so for a 30-year fixed, as of today, Wednesday, the 19th, sometimes I lose track of my days. but is sitting for 30-year fixed at 7.22%, which is up today 0.07%, up on the week 0.17%, and up on the month 0.80%. For a 15-year fixed, we're looking at 6.55%, which is up 0.17 basis points today, up for the week at 0.25%, and then up for the month 0.85. A 30-year jumbo is sitting at 6.75, which is up 0.13. For the week, up 0.132 as well percent, and then for the month, up 0.63. 30-year jumbo sitting at 6.15%, up 0.05% today, up 0.10 for the week, and up 0.41 for the month. 5-in-1 arms sitting at 6.45, up 0.10 for the day, up 0.05 for the week, and up 0.32 on the month. And then our 30-year VA is sitting at 6.77, up 0.12 for the day, up 0.09 for the week, and up 0.62 for the month. Let's dive quickly into the treasuries too as well. And we can see that we've just been on an upward climb when it comes to the overall treasury yields. And again, the same principle applies. When the price of the 10-year treasury goes down, we can expect the yields to go up. And again, we still have inversion from where the 2-year treasury yield is at right now to the 10-year treasury yield, with the 2-year giving you a better overall return, which of course, we know that when it is inverted, it definitely does, and especially if you pay attention to these videos, when it is inverted, it is definitely going to indicate that a recession is coming along. Is the Fed going to be able to come in for a soft landing? I highly doubt it. But if we're taking a look at the price change, we can still see that it actually went down a full point, okay, today. And we can see that the treasury yield is on its way up. And now the 10-year treasury yields have finally surpassed into the 4s, where they were at the 3s just about a couple of weeks ago. Taking a look at the 2-year treasury yield, we see this at 4.55. Again, the price went down too as well at just 0.21 on the price change. But we can see that the 2-year treasury yield itself went up and is sitting at a whopping 4.5. Now, generally, when these yields also get around 5, something generally happens. I would reach out to your preferred financial expert and talk to them about what happens, but sometimes they do kick back and generally tend to come on back down. But again, reach out to your financial advisor, talk with them about that if the bond market is right for you. And lastly, let's just go ahead and dive into what's happening generally in the stock markets overall. As we can see, over the last 5 days, the stock markets have been actually doing pretty good. Today, not so good. They have been on the way down. I'll get to that here in a second. But if we're looking at the Dow Jones Industrial Average, we're looking at a 1,600-point general gain, up 5.67% over the last 5 days. But again, today, not doing so hot. If we just kind of go ahead and take a look, it has taken its shot at 136.29, which is down 0.45% on the Dow Jones. And generally, when numbers are kind of reporting that the way that they are, and the economy is generally kind of looking more healthy than what the Fed really wants it at right now in order to be able to tame inflation, you can see people will generally go back to the stock markets. But rarely when economy numbers are kind of going down, you can see a lot of people running over to the bond markets and investing. But in this case, really, when any of this data seems to be coming in lately, the volatility is kind of all over the place. And you do see not only the stock markets kind of take hits, but you also see the bond markets take hits as well. So interesting stuff that's going on. But over the, if we're taking a look at the Nasdaq over the last 5 days, it's up 5.13%, which is really, really good. Okay, in that aspect, it's showing that it's doing fine. But over today, down 91 points, down 0.85%. And then briefly, just kind of recapping on the S&P 500, again, up 4.79% over the last 5 days. But today is also kind of taking a shot too as well. All right, so let's just go ahead and briefly recap, all that information that came across. So what do we know? We generally know that of course, the U.S. economy is still seeing inflation come up month over month. Is the Fed actually being able to do their job aggressively enough currently in order to kind of correct the inflation situation that we have here in the U.S.? And right now, the question to that, or the answer to that question, is no. But we do have a new meeting coming up. The Fed is going to go into their blackout period next week to be able to discuss all this and be able to see how aggressive that they want to get coming up in the next meeting here in early November. So we'll see what happens to the federal funds rate, and what we need to be doing is just kind of more or less crossing our fingers that their response is going to be able to affect the core PCE and the core CPI to be able to bring those numbers down month over month and kind of give, everybody hope that this is all going to generally kind of come to an end. But what I do see coming up is that the soft landing that they were talking about is really kind of not going to present itself as much as the effects of a recession are. So that's actually really good news. And because we do know that when a recession hits, or the effects of the recession do come in, we know that interest rates historically come back down. My money is still on after the midterms to Q2, when this actually kind of all gets itself filtered out and the effects actually kind of start taking place for the interest rates to start coming down. But does that still mean that this is a bad time to buy or deal in real estate in general? And really kind of no. Because if you do follow and you do subscribe to this channel, buyers, you do know that there's options out there. We do know that this has returned back to a buyer's market, to where there are price reductions all over active listings right now. Plus, we can probably also negotiate for an even lower price, but seller concessions have returned, and that's the key. If we can get some seller concessions, or if they're offering it already, then what you could possibly use that for is what's known as a 2-1 buy down. At the end of this video, I'll go ahead and put a little link to the to one of my videos, which went ahead and explained what a 2-1 buy down is all about, so that you can go ahead and be informed in your possible purchase decisions. But if mortgage interest rates are what's really kind of rocking your confidence right now from buying, the 2-1 buy down is definitely a good option to go. And of course, sellers, this will eventually, kind of work itself out to where things will kind of go back to normal positions, especially as that gap kind of gets narrowed between the active solds that are going on right now as compared to the active inventory. So we just need to see that kind of curve and be able to stabilize things as we go along. So if you are, again, looking to buy, sell, or invest, please feel free to reach out to me with any questions that you do have. I'd love to be able to set up an appointment with you too, to be able to talk this over and give you the best strategies to be able to succeed in this market today. Well, thank you very much, everybody, for taking the time out of your day to watch this video. Of course, if you do have any additional questions regarding this information, or you are looking to buy, sell, or invest right here in the Treasure Valley, please feel free to reach out to me. More than happy to assist you with any questions that you have, or even to get you right here into the Treasure Valley if you're from out of state, or if you're, say, renting around here in the Treasure Valley, more than happy to get you into a home. So, of course, if you have any comments too, please say them below. I'm more than responsive to this. Love to hear your thoughts about where you think this is all going to land towards the end of the year and into next year. And love to speak with you about that. But, of course, if you're trying to get a hold of me, I can be reached at area code 208-715-STAR. Again, that's 208-715-7827. And if you are looking to begin your home shopping experience today, please visit my website at www.yourstarrealtor.com. Also, if you're looking to move into the Treasure Valley from out of state, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, please hit that subscribe button below, punch on the notification bell so that you're constantly in tune with all the videos that I do come up with, and I look forward to the day when we speak. I look forward to that day. I look forward to calling you my neighbor. God bless. Until then, thank you so much. Bye-bye.